Good morning from Los Angeles, the city of angels. Good morning, traders. Good morning, investors. Good morning, students. Good morning for all of you. Are you guys ready for the weekend? I certainly am. Had a really good trading week, and it continues obviously today. Good morning, everyone. I'm sure you all gather around in about 15 minutes. So the first 15 minutes, I just talk to myself a little bit, and then we'll go on. But so a couple things. Today, unemployment numbers came out. We all know they were great. However, as we have discussed in the previous power hours, what does the government do? The government puts out a number that beats expectations. And of course, the stock market opened up sharply higher because that number, is an important number. Unemployment, obviously. It kind of indicates where the economy is at. Unemployment has been going up. It went up from 3.5% to 4.2%. And it beat expectations. So all it has to do is beat expectations. Well, it should beat expectations. But after opening sharply higher, what the market do? I think the market's also catching up to this gaslighting issue, meaning they will put out a number and then the next month they will revise it. As we discussed previously, for 7 months, about a month ago, the government revised the number down 818,000. So they said, well, we miscounted 818,000 people. I don't know how much of a good look that is for, the data that we receive, right? So, but, traders react. And when the numbers are good, traders jump all over the futures before the market opens because it comes out at 5:30 a.m. Pacific, 8:30 Eastern, about an hour before, and then the futures took off, and so did the market. Market opened sharply higher, but then this is becoming like a yelling fire in a room. What did they do? They They sold it off. They literally almost sold it off to unchanged levels from the sharply higher opening. So that's indicating to me that they're not buying it. However, now from unchanged to we're rallying again. I missed two absolutely bonkers trades, which I'm actually kicking myself about. I definitely would have done it. I had a really good week trading. I think my account is up close to 5.5% this week, my actual trading account. And in my actual trading account, it's a lot of money. So for me anyway. And I pulled all the right strings. So today I still have positions open, which I'm going to share, obviously, as I always do. So a couple of little things as far as business is concerned. Yesterday we had our first inaugural, whatever, members only live stream. Now I had a little bit of a technical issues. It started about 10-15 minutes late. But the next one will be on the 17th. So every 2 weeks, I'm going to do a members only live stream. There were 6 present. I think they got a lot out of it. So I don't know if they're here today or not, but they really, I think, got a lot out of it. It went on for close to hour and a half, hour 45. I answered everybody's questions, not only answering questions, but we talked quite a bit about what's the benefit of becoming a member of the channel? I mean, number one, obviously, you're going to get a lot more hands-on. And the other thing I did is I saw everybody's face for a change. So I put the, link in the show notes, and then everybody jumped on. Some had some issues, some were okay, but I think it went great. I think they got a lot out of it. So if you want to support the channel, please grab a membership. So I'm going to do these members only live streams twice a month. Those are on top of what I'm doing now. But then schedule is going to change maybe in a couple of weeks. So Mondays, Wednesdays, I'm going live at 10 a.m. Pacific, 1 p.m. Eastern for Trading with Sergio. Okay. And on every Friday, which I've been doing since I started the channel, this section or this segment is called Power Hour. And it's on Friday. So that's going to continue indefinitely. Okay. Monday Trading with Sergio is definitely going to continue, because now I feel like it's like bookends. You get Monday, you set your week up, and then you look at your results on Friday. You're closing your books if you are, obviously. So Monday Trading with Sergio and Friday's Power Hours are going to continue. Wednesday Trading with Sergio, it will probably stop in a couple of weeks. But then what's going to happen is the members only live streams are going to move to Wednesdays, again, 2 times a month. So yesterday, when we had about 6 people on, they asked me a lot about trading, obviously. They asked me a lot about education, information, what books they should read, which they probably missed the earlier episode. So I gave them the information. We talked a lot about a couple different things. So a lot of you seem like they have, specifically a couple of you, and one of you doesn't have that problem. One of the members didn't, but a couple of them had a major problem in pulling the trigger because, well, they don't trust themselves. I understand. But that's why I'm doing the Mondays and Fridays, sharing my positions. But then I can get in and out of these positions within hours or within a day. And then if you miss it, then you're going to be holding the bag, which I don't want you guys to do. So when I say that, you can follow me, but risk is on you, because this is not financial advice. This is not trading advice. It's not investment advice. It's definitely not advice. It's information and education. If you do follow me, I get in and out, and then, you get caught with something because I'm on it, right? So, I have my buy points, I have my sell points. And when things get there, they're not going to wait for you guys to join a live stream and figure out what I'm doing in my account. So simple as that. So you got to take that risk. There is that additional risk. But during the members live stream, a lot of people said, well, I don't trust myself. I go, great. If you don't trust yourself, you're at the right place. You're going to learn, so, grab a membership. I think it's definitely worth what it is. And again, it's not for the money, but what it is that to sustain the channel. And Chris is my YouTube manager, obviously, here. So, we appreciate the support. We look at it as support. We're not going to get rich by being on YouTube. That's a fact. More importantly, though, that one-on-one interaction and seeing everybody's, because everybody's got some sort of name on, YouTube. It's not the real person, right? So to see their faces, to see them live during a members-only live stream, I think was definitely a great start. The next one is going to be on the 17th of October, and then every 2 weeks. Once I stop doing the Trading with Sergio on Wednesdays, we're going to move to the members-only live stream, and this is going to continue. So we're hoping the membership continues, and it's also, membership grows, and we have more people joining. Another thing that happened during the membership, live stream is there was a gentleman who's a member, obviously, who suggested something which I hadn't even thought of, which was an amazing idea. So I had recommended these 2 books, right? One on technical analysis and one on option trading. Well, what he's doing is that he's utilizing ChatGPT, which is, I think, amazing, right? So what he's doing is he's having ChatGPT quiz him, and I hadn't even thought about it. So I think that's a wonderful idea. And ChatGPT, as we know, is free, right? And you can use any different model. It doesn't have to be just ChatGPT. Any large language model you can use. The other thing he's doing is, since ChatGPT has, or any large language model has read the books that I recommended, you don't have to read 500 pages of the book that it'll be too much information. It'll be overwhelming. So he's going in there and asking ChatGPT all these questions to summarize the chapters for him after he reads it. I want you to read it, but then to get it in your head, a summary of a chapter, I think it's important, right? And then I gave him some homework. So it was great. I really did enjoy it. It went a little longer than I thought because I started a little later, but I think it went really well. So with that said, let's see. Mojotronics, yes, he was there yesterday, although he had some technical issues. Hopefully he won't have it again. Melvin, hey Melvin. Chewy is there, Chewy 13. So good morning to everyone. I don't know how many of you are here. I think StreamYard is having a little bit of an issue, but so typically what I do on Fridays is, go to my topic list, talk about the topics, a few minutes, maybe 5-6 minutes max on each topic, and then go to, my account and what I'm doing, what I'm trading. It is happening in the background. I will share that obviously every time I'm live. Again, if you guys do follow me, trade at your own risk. It's because I don't want you to. I mean, I don't mind, but I don't want you to use me as a crutch. Yesterday the main topic was actually, I don't want to give you a fish. I want to teach you how to fish, because when I'm done with this, you should have the tools to do this on your own. Will it take time? Of course. Will it require patience? Of course. Do you think you're going to get rich overnight because you see all these things on social media that people, trading 0 DTE options and becoming rich? No, it doesn't work like that. The way it works is patience, position, and planning. And I did all of that this week, and it was a great trading week. And hopefully it'll be another one next week. But so yeah, if you're interested in the membership, you just have to click join, and then you're a member. And I will see you all again on the 17th of October for another members only live. So with that said, I think I pretty much said what I needed to say. So I'm going to get into, the first topic. The first topic is global central banks are in panic. Why are they all lowering interest rates? Well, the important thing with all of this that I'm trying to do, okay, with you all, is have an idea about the macroeconomic conditions, because macro is important. Macro rules. I mean, technical is technical. Technical, you're looking at a chart and you're deciding to do something and thinking or hoping that the past repeats itself. And in most cases, it does. But to actually okay, so did I get cut off? I think it did. God dang it. No? Okay, it should be okay. Did I freeze? All right, I'm just going to continue. I don't know. No, I think I got cut off. Well, don't leave the live stream. I'm going to try to fix it, obviously. Okay, it just seems like it's back. Yeah, my internet is having issues. The point I'm trying to make is you have to have ideas about the macroeconomy. The macroeconomy is definitely what you should pay attention to, and I'm going to help you guys understand most of the intricacies of the macroeconomic situation in the country and globally. So again, my hat's off to the Kobesi letter. I'm on Twitter, so my handle is in the link. The links are in the show notes. You can follow me on Twitter, but you should definitely follow the Kobesi letter on Twitter. They have become my go-to because they summarize certain things I want to talk about much better than I could do in a few sentences. And so I have to do less work. The less I have to work, the better for me. And we don't agree with everything they're saying, but I agree with most of it. And when I do agree, and when there's a topic I want to expand on, talk about it, I'll put their screenshots up, and then I expand on it. But I think you should definitely confirm your technical picture that you're looking at a chart. Chart's going to tell you a lot of the story already, okay? But you should confirm or affirm whatever the chart is saying with some background in macroeconomic conditions. And As we know, Federal Reserve cut the rates by 50 basis points or 0.5% a couple of weeks ago. Well, right after that, China did, right? And what did that create? A massive 20% rally in the Chinese stock markets, okay? Now, if you understand economics at all, all the Federal Reserves or all the global central banks are lowering interest rates aggressively. Why are they doing that? Why do you guys think they're doing that? So if you have a picture of the history of why global central banks cut interest rates, then you will understand what they're expecting of the macroeconomic conditions to get better going forward or to get worse. Well, economics 101, Federal Reserve or global central banks do not lower interest rates if they think everything is great. Now, the Federal Reserve, U.S. Federal Reserve, gaslights quite a bit. They say everything is fine, unemployment is fine, inflation is fine, all this is fine, GDP is fine, but we're going to cut rates anyway. I'm like, no, it doesn't work like that. Nobody's buying that, right? Nobody's buying that story. What I'm looking at, though, because I said, if everything is fine, why are all the central banks panicking? So there were 21 interest rate cuts conducted by global central banks in September, just past month, the most since April 2020. Well, what happened in April 2020? In early 2020, we got something called COVID, right? The Black Swan event that crippled the global economy. And what did all the central banks start doing? Immediately start cutting rates, right? So the fact that there were 21 interest rate cuts conducted by global central banks just in September in concert with each other, it concluded with the Chinese PBOC cutting the rates 50 basis points. And 50 basis points is unheard of in China, okay? And I talked about that last week, that they're worried about deflation, not inflation, and they're worried about their economy slowing down. We'll have a video on the channel about that. And there we are. So all global central banks are panicking to the point that they're cutting massively. I'm like, okay, what does that foretell, though? That says that the economy, their expectation of the economy going forward, and all this data that comes out, like unemployment today, is a lagging data. It's lagging, right? It's from last month. Well, show me the paper for tomorrow, then I'll tell you what the market's going to do. But all these lagging indicators that they're looking at must be presenting a challenging picture to the global central banks. That's why they're lowering interest rates. And I agree, and all of them are trying to manage this mythical creature called soft landing. Is it going to happen? No. Last 6 times that interest rate cuts happen or the Fed pivot happened, 5 out of the 6, we went into a recession, regardless of what the global central banks were doing. So outside of the pandemic response, this is the 3rd largest month of monetary easing since 2008. We know what happened in 2008. What happened? Great financial crisis. Millions losing their homes and banks going under. I remember those days. I remember that crash. All the global central banks aggressively lower rates, but what happened? Massive recession, right? Okay, so when all these global central banks are cutting rates, they are expecting some softness ahead because they're always preempting, right? They're trying to preempt what they're seeing or what they think is going to come. And, this all comes as central banks across the globe believe they can achieve a soft landing. Well, that's the mythical creature that I talked about I think it was on Wednesday, or no, it was last Power Hour, last Friday. And I'm pretty sure we'll have a video. There's something called the Fed pivot. Fed pivots between QT, quantitative tightening, to QE, quantitative easing. Well, with this rate cut, they announced basically saying that QE is here. Don't worry, we're going to soft land to 747 on a patch of grass. I'm like, no, I haven't seen it yet. I mean, over the last 40 years, this was attempted 6 times, 5 times it failed. 1 time quasi it happened. But I do understand why they're cutting rates. I know why they're panicking, and they're not, they're looking ahead and not seeing a pretty picture. So meanwhile, Germany's GDP is expected to contract for 2 straight years for the first time since 2002. China is also on track to miss its annual economic growth target of 5% GDP as they fight the streak of deflation since 1999. Again, I am not being the bearer of bad news. I'm trying to interpret the tea leaves for you guys because I have an econ degree. I have a finance and economics degree. So I do understand what they're trying to do. And my conclusion is, will they be successful? And what will I do going forward with my trading? How will I adapt? Well, I had a negative bias for 6 months, still making money. But the point is, I want you to be prepared for what's ahead. And that's why I do these segments. And the reason I love the Kobesi letter on Twitter is because they always end up with a graph, which to me sums it all up. So in this graph, September 24th is biggest month of monetary easing since April 2020. We know what happened in April 2020. Yes, it was a black swan event, but if you guys go back to 08, so this chart goes back to 2001, about 23, 24 years. You guys see these little blips, right? So on the x-axis and y-axis, there's different data, obviously, but you know, you can take a screenshot of this and then, you know, blow it up pretty much, or you can go follow the Kobesi letter and you guys will see the same tweet. Is that look at the spike that took place in 08, 09, and then it just kind of subsided. Those spikes mean those are the interest rate cuts. Those are the easing. Those are the quantitative easing that's happening now, right? It's just started. So during the pandemic, so every time that you see a blip up on those charts, that, by the way, coincides with a recession, okay? And that's the reason they're cutting the rates. They are expecting a soft landing, but if it doesn't happen, they're going to cut rates more aggressively going forward. And the expectation of the Fed is that they're going to cut rates 200 basis points by the end of 2025. That's 2 percentage points. That's a lot. So we had ZIRP, zero interest rate policy, for literally since 2008, right? And then it accelerated in 2020 due to the pandemic. And then in 2022, finally, after 15, 17 years of zero interest rate policy, you know, Fed raised rates from 0 to 5 to kill inflation, because all that pumping money created massive amount of inflation, and we all are suffering from the effects of that inflation. Everything we're buying is, I don't know, 100% higher over the last 3 years. That includes food, but, you know, and energy, obviously, which the Fed does not count food and energy for some reason. I guess those people in Washington don't eat or drive. But so now, as you guys can see with the oval or circle on the right-hand side of this chart, September 24th was the largest day of global central bank interest rate cutting, and it happened. 21 cuts took place. So when this chart kind of spikes up, that means they are looking ahead and not seeing a pretty picture, and they're trying to preempt a recession, and they're cutting interest rates. So I'll end with the title that I started. Global central banks are in panic. Why are they all lowering interest rates? Hope you guys understood why they're trying to lower interest rates, what they're seeing. And I hope I was able to kind of read the tea leaves for you guys. And this remains to be seen, by the way. It's not written in stone, but then every time I'm on Mondays and Fridays, you know, we'll keep track of what we said in the past. And my conclusion is that we are definitely going into a massive slowdown, because recession has a, you know, quite a different description by everybody, but we're definitely going in a major slowdown. And you know, Federal Reserve, I think, is behind the curve, and I don't think they're going to be able to avoid a slowdown, if not a recession. So that's the conclusion. I'm going to go to the next topic, is that the headline of that is going to be, are we on the verge of another stock market meltdown? Is it really different this time? Well, let's talk about that for a few minutes. The stock market is at an all-time high, okay? It's definitely not factoring in a recession or even a slowdown. It's for sure pricing in a soft landing, that the Fed, which they have failed out of the last 5 times the Fed failed to manage a soft landing, it has 100% bought its hook, line, and sinker, And the market is the market. Market's going to do what it's going to do. One thing with the market is the market's always 6 months ahead of economic data or macroeconomic conditions. So we're at an all-time high. Fed and global central banks are cutting rates, like I discussed in the previous segment. While lower interest rates are good for the stock market, are we going to have a melt-up going forward from here? What do you guys think? I don't think so. I think so when the market prices things in, there's a saying, I'm sure many of you have heard me say that, market goes up the stairs and it takes the express elevator down, like it happened with the Japan carry trade situation about a month ago. NASDAQ sold off 15% in 2 weeks. I mean, that's a lot. And if you guys were in the market, you guys knew how vicious that was. But then it came right back. So that means market's still looking at soft landing. Market's not looking at economy slowing down. But so if it's not going to slow down, if everything is fine, and now the Fed and the global central banks are cutting rates. Look, China cut the rates. And what happened? I mean, their stock market went up, literally up 25%. This is the whole market we're talking about. Individual stocks did a lot more. So, okay, well, are we going to have a melt-up? I don't know. I don't think so. I think this is just suckering in pretty much everybody that needs to get in, because the market is a mechanism to make everybody wrong. Again, am I trading? Of course. Am I going short the market? Of course not. I won't do any of that until I see the picture. But then I'm ready for it. I have my tools ready. I have my gun loaded. My account is 85% cash these days. And, I'm trading with 15%. I'm trying to protect equity, right? And I'm trading my equity. I'm not even looking at individual positions when I get in and out. But when the time comes, I definitely am ready for a little swoosh. But so the S&P 500, okay, if you guys, by the way, had taken any advice from me, and dollar cost averaged over the past God knows how many months, you should be doing great. But if you did it over the past few years, or 10 years, or 15 years, or 20, that's why there is no bad time to invest. Just open a small account, $50 a month, $100 a month, whatever you can put in there. By the way, the statistic is this: if you're 25 years old and put just $100 a month, one single $100 a month, not day, not week, into an index fund such as S&P 500 or the triple Qs, whatever you choose, okay? By the time you retire, this is not a joke. You guys can go Google this. By the time you retire, not even by the time you retire, by the time you're 55, 10 years before the retirement age, with compounding, and basically every first of the month, your dollar cost averaging into an index fund, okay? You would have $1.2 million. Would you not want to have that? This is outside your earnings on your, W-2. This is outside your 401k. This is outside your retirement IRA. This is outside all of that, right? Just $100 a month. And at the age of 65, which is when hopefully you're going to collect retirement, right, from the government, which I don't think you will if you're young, but I'm hoping in 8 years, I'm hoping Social Security is there that I get some of my money back, is you would have over $2 million. You guys are going to go, it's silly, Serge. It's not possible. I'll go Google it, and then you guys will understand that it is possible. But so start investing. There is no bad time to start investing. And S&P 500 rallied 20.8% in the first 3 quarters of 2024. 21% almost in just 3 quarters, posting its biggest gain since 1997. Is every year going to be like this? Of course not. What is the average? It's about 9-10%. Reinvesting the dividends is about 10.5%, right? This goes back, by the way, includes all the crashes, all the bad things that you guys hear about because the media makes a big deal out of it. The point I'm trying to make is, on average, it's about 10%. I take 10%, and then you guys have to understand the rule of 72. 72 divided by 10 is 7.2 years. Every 7.2 years, your money is going to double. Think about it. If you're earning 10% return on something, this is nearly double, right? The average 11.7% increase seen last year, and the third best performance since 1990. So market is definitely pricing some rosy pictures in here. And the global central banks are saying, well, maybe it's not that good because we need to cut rates. So there is something is going to give here. We're either going to have a melt up or we're going to have a meltdown, one or the other, because lower interest rates are supposed to be good for stocks, right? The index also recorded the best start to a presidential election year in history, which we have in 30 days coming up. I can't wait until that thing is over. Last week, the S&P 500 hit its 43rd all-time high this year, the best streak since 70 new records in 2021. And 2021 was what? We were pumping money like crazy, $7-8 trillion. Economy was like taking off, coming out of the pandemic, right? Everybody was getting their vax. And I'm like, yeah. So since October 2023 low, and when the Fed started, by the way, increasing rates, abandoned the ZERP policy and went from 0 to 5%, the market sold off about 30%, by the way, people. So that wasn't a joke, right? That was between late 2022 all the way to October 2023. The index is up a massive 40%. So that's from the low, but you don't have to cash the low. Just dollar cost average, $100 a month into the same index fund, or take two index funds and put half in there and half in there, and just, it's like set it and forget it. Okay, that's as simple as I can put it to you guys. This market feels unstoppable. Well, we'll find out. Kobasi letter. I don't agree with this. It's that but it says feels unstoppable. That I agree with. It's unstoppable. So, and of course, there is always a chart with them. S&P 500 year-to-date price change through the end of Q3. This chart goes back to 1990. Okay, so 1990 obviously is, what, 34 years or 30, something like that. So you guys see mostly it's up bars, green bars, right? So this is every single year what the market has done, the return on the S&P 500. Very few, but then the few that are red, that means down on the market, are pretty massive, right? Okay, so in 2000, 2002, that period, what was that period? Dot-com bust, right? The bubble burst. First year, market down 2.2%, S&P 500. The second year, down 21.2%. Third year, down 29%. So if you add all those three up, we're talking over 50% decline in the market. So when the market declines by 50%, guarantee you your stock is going to decline by 80%, okay? And then what happens though? See, this is the power of dollar cost averaging. So when the market's tanking, you're buying at a lower price. When the market's going up, you're buying at a higher price. That's why it's called dollar cost averaging. You don't care what the market is doing. You just pop in $100 a month and, look at a pretty picture going forward. Because $100 a month, by the way, could be saved so easily. So easily. How? I don't want you guys to change your lifestyle, because $100 a month today, in today's dollars, is nothing. Okay? Because you go to McDonald's now, family of four, eat, it's $100. Okay. I'm not saying for you not to do that, but we all have these individual little perks for ourselves, right? I'm pretty sure most of you, or all of you, go get $5.50 to $7 cup of Starbucks pretty much at least 3 to 5 times a week, if not every day. How about we just prep that at home? And I'm not saying don't splurge. Maybe do it once a week. Just cut that part. That will be your $100 a month. Period. Simple, right? Those are the pleasures of life. I understand. I'm not telling you guys to stop doing that stuff. Okay? So the point is, just cut down on stuff that when you're about to buy something, because do I really need this? Right? And think about your 1.2 million in 30 years and go like, no, I don't think I need it. And let's just take that $10, take that $5, that take $8, or the change or whatever that you're about to spend on something that you really don't need, or the plastic that you're going to use to buy something on Amazon that you don't need. Just go, no, I think it's going to go into my fund. And you just take that, and then the first of the month, plop, $100 in. Again, $50, $20, whatever you can do, but start doing it. And don't come and tell me, oh, I'm too old, I don't think it's going to work. I'm like, why is it not going to work? Okay, let's say you're 50 years old. You start doing it. By the time you're 70, you will have $600,000. I mean, I don't know. I think it's pretty good money. Although in 20 years, your $500,000 might not buy much because of inflation. But hey, Would you rather not have it? Yeah. Okay. So then, obviously, market turned around in 08. We know what happened. S&P 500 down 20%. And then the big one, of course, during the pandemic, S&P 500 down 25%. But most of the time, the average returns are up, and more green bars than red. So, however, we're at an all-time high when the Fed is cutting rates. So either a melt up or a meltdown is coming, and I'm ready for both. I'm going to end this with the Kobesi letter's wonderful summary. Okay, stocks are rising like we have avoided a recession. Agree. Gold prices are rising like we're heading into a recession. Agree. Gold is making all-time new highs. What is gold? Gold is an inflation hedge. Now, if the Fed and the global central banks are cutting rates, is this going to accelerate inflation back up again? That's what gold is saying. Oil prices are rising like we're heading towards World War III. I agree. I mean, we know what's going on in the Middle East, right? So what happens if Israel goes and decides to blow up all the oil infrastructure of Iran? By the way, Mr. Waltz, it's not Iran. It's Iran. Okay? I mean, you're an educated man. And but they all do it in Washington. They go Iraq and Iran. You're not running anywhere. It's Iran. So, number 4, bond prices are falling like geopolitical tensions are easing. Very true. Like today, bond prices actually fell because interest rate jacked up because unemployment numbers came out a lot stronger, according to the government, than expected. Crypto is falling. Crypto, I thought it was decoupling itself, but it doesn't seem like it. It seems like it's just following the market. It went up to 65. Now we're back down to 62. But then I'm telling you guys, I'm going to do a wonderful interview about crypto with a gentleman who did something that I think is brilliant. But you guys have to stay tuned for that. Crypto basically has been going between, when I say crypto, I only have one crypto in mind, which is Bitcoin. It's been going between 58 and 68 for 6+ months now. So if I'm a trader and I'm looking at that chart, that thing has been going sideways for so long. Either that's a massive top that the bottom is going to fall off, or that's just a consolidation phase that when we take off, we're doubling. So we will talk about that, how to take advantage of that as well, coming up shortly. And tech stocks are rising like risk appetite is at all-time highs. Absolutely. Look at the Mag 7. Look at the NASDAQ, right? So here it is. Finally, Kobesi letter says the epitome of a broken market. So many variable signs, and we'll see. We'll see. We'll see what happens. But on this topic, my conclusion is: are we going to have a melt up? No. Are we going to have a meltdown? Okay. We're going to have a meltdown more likely than we're going to have a melt up in the stock market. So my next topic is my favorite topic of all time, because I think the Washington and the Fed are mortgaging my kids' future. I have 2 kids, one in college, 3rd year, 20 years old. The other one, 1st year in high school. I think they're mortgaging their future, and there's nothing I can do about it. So the topic is U.S. national debt approaching $36 trillion. Does anyone care? And that's the title of today's Power Hour. Does anyone care? Elon Musk is tweeting quite a bit about this, which I'm going to talk about his opinion of where we are. Washington, this is horrible. Stop borrowing money and spending what you don't have. Period. Stop. I can't do that. I can't add zeros to my bank account and spend the money I don't have. It is taxpayer money. It is our money. Do not spend it frivolously. I don't know what else to say. So breaking. U.S. public debt has jumped $345 billion. I started channel like 3-4 months ago. I've been talking about this subject pretty much on every Power Hour. And I'm going to do it until I'm blue in the face. 345 billion over the last 3 days. In 3 days, 345 billion to a record of 35.7 trillion. We're about to get to 36, and then 100 days later we're going to be at 37, 100 days later, we're going to be at 38 because the deficit, or not deficit, U.S. debt, total U.S. debt is going up by $1 trillion every 100 days. This is regardless of who's in charge. Doesn't matter. When Trump was in charge, it went up $4 trillion. When Biden and Kamala are in charge for the last, 4 years almost now, up another $4 trillion. It's just non-ending. Stop spending the money you don't have, Washington. Since June 2023, federal debt, and by the way, in both debates, there was maybe 2 questions in total about this, which is, I think, is the most important thing that's facing us. But they go like, no, we're not going to talk about that. So since June 2023, federal debt has surged by a massive $4 trillion. What? Why? What? How? How? I know how. We just spending money we don't have. And that's because our fiscal policy is completely broken. That's Washington. And what does the Fed have to do? Fed has to print money and put it into, close that gap up. So, for example, our tax receipts are $4 trillion. Well, our budget is $6 trillion. Well, it's $2 trillion missing. Where's that going to come from? Issue the IOUs and borrow the money. That's it, right? So basically, Fed has an unlimited credit line. And who offers them that line? Themselves. Right? Okay. Over the same period, US GDP is up just $1.5 trillion. So you guys see what's happening here? When we used to do this, well, I'm not against debt, by the way, but debt used properly, I think, is wonderful. Debt used improperly, like these knuckleheads, is horrible. Okay. Look at the ROI on this debt that we're creating. So debt going up by $4 trillion. The reason we're doing it is to grow the GDP, get productivity out of the economy. Well, it used to be like that if we created $1 trillion in debt, it would be like 4x or 5x. It would boost the GDP, it would boost the economy. Well, now we're spending $4 trillion to get $1.5 trillion out of it. So we're even less than 50 cents on the dollar. Okay. So the ROI on this debt that we're issuing is garbage. I mean, horrible. Right. And what happens if we do going to slow down? We're in this, 70% of our GDP is consumer spending. Economy slows down. GDP right now is 27 trillion, gross domestic product. Our debt is about to go 36, so we're 130% of GDP. What if we get not a recession, but slow down, and GDP goes down to 25 trillion or 24 trillion or 22 trillion? Well, that's going this way. GDP is going this way. How do you guys think? The market's going to melt up or no? I don't know. In other words, the national debt has outpaced the economic growth by 2.7 times over the last 16 months. Exactly, Kobesi Letter. Hats off to you. Outside of the pandemic crisis, U.S. federal debt has never grown so rapidly. So when people come to me and say, oh, under Trump, it grew up. I'm not a Trump or a Kamala person. I don't like either one. I'm actually libertarian, so I'm announcing it now. I just don't like the government involved in my business. And I don't think the government does anything good for their people. They probably did maybe 30 years ago. But when I showed up in this country, it was okay for a while and then just downhill. Whoever's in charge, it's just not good for the American people. So outside of the pandemic crisis, U.S. federal debt has never grown so rapidly. What is happening here? We have a Washington that's out of control. Their fiscal policy is horrible, trash, and the Federal Reserve's monetary policy is trash. So we have two trash going at it. And who suffers? We suffer as the American public, because when the monetary policy follows fiscal policy, inflation gets created. When inflation gets created, it's like a tax on the average American. Go into Costco these days. Let's see what you can buy with $100. Not much. I will answer that question, Jonathan. Definitely, I'm in that camp, and I'll talk about that real quick. So the next topic I'm going to talk about is, the opposite of the melt up. Is the rug pull on the stock market imminent? Is there going to be a rug pull like there was when? Month ago? Memories are short, by the way. We have, as traders, we have to have golfers' memories. We need to just forget things that are going on and move on to the next one. But so there's things that I follow to see where the rest of the traders are. And this is a cumulative score, okay? So there are things like put call ratios that I follow. There is like sentiment, obviously. There is investors letters that they go out to all their subscribers. Are they very bullish? Are they very so? This is a contrary indicator, by the way. So imagine if there's 100 investors, massive investors in a room, 90% are bullish already. What difference does it make if the rest of them go bullish? Nothing is going to change. So that means we're going the other way. So contrary kind of indicators, and that's why Warren Buffett is so successful, because he's sitting on 280 billion in cash, more than the federal government actually, in T-bills anyway. And he's like, okay, I'm just going to open my hands, and when the panic happens and the poop hits the fan, I'm going to just buy everything cheap, right? Okay, so he has his war chest ready. How's your war chest? Is it ready? So I look at sentiment, right? This is for longer term picture. This is not for day trading purposes, which I don't do anyway. Bullish sentiment is through the roof. I agree. So that kind of coincides with, everybody says it's going to melt up. I'm like, no, that's why I'm going like rug pull. Rug pull is about to happen. So watch out, people. U.S. equity futures positioning. This is big money we're talking here. We're not talking me here. U.S. equity futures positioning by investors, excluding market makers, which are always balanced anyway, hits a new record of 290 billion, the most on record. Look at that chart on the right, people. So when that thing is like on its butt, it's a market bottom. When that thing is up there, is market top. Look at this chart, okay? Look at 2021, right when we hit the pandemic. Look at that like little crash that happened, right? And then it got built up. And then when Fed started raising rates from 0 to 5, look what happened, right? So when it gets to that level, to the bottom of the chart on a scale, but look where we are now. So everybody is bullish. Everybody thinks we're melting up. Everybody thinks every day we're going to hit all-time highs. I'm like, I'm not buying any of that. So as a contrary trader, I know what I'm doing. So this is also twice as high as during the previous peak seen in early 2018 and 2020. So that's why I said, is this time different? That's why you follow macro. That's why you follow history. Is it different this time? Am I missing something here? I don't think so. Meanwhile, this is the killer for me. And a lot of people are going to get hurt when the rug pull happens. Meanwhile, U.S. households' stock allocation as a percentage of financial assets. Let me read this again. U.S. households' stock allocation as a percentage of financial assets hit a new record of 41.8% in Q2 2024. Investors are all in on stocks. 42% of someone's in the US on average assets are in stocks. That's an all-time high. So everybody is in. When everybody is in, is there more money to come in to keep pushing it higher? Isn't this like the bigger fool theory, right? It was exactly like this, by the way, in 2000 when the dot-com bubble was happening. All we needed to do is just find something, right? Find a fool to buy the stuff you bought yesterday at a super overpriced price at a better price than the day before. That was the game. We find something, throw a dart. Well, somebody's going to buy it from me higher tomorrow. Well, sure enough, that's what's happening now. Although in a much, smaller degree, not like those crazy days, but 42% is extremely high. And that chart on the upper right, inside the oval, going through the roof. When everybody is long, there is nobody else left to get there, because what is the market? Supply and demand, right? When everybody is already long. How do you, by the way, take profits? You got to sell to take a profit. Okay, granted, everybody has a profit. Wonderful. Well, you got to sell. So rug pull coming up, we'll find out, but I'll be on Mondays, Wednesdays, and Fridays to let you guys know. I will answer all the questions. Keep putting the questions, keep putting your comments in there, please. And last but not least, on this topic, this is FINRA. FINRA is an agency that keeps track of margin debt. Margin is something you guys should never use unless you're like a complete professional, okay? Margin is a wonderful thing when things are going the right direction for you, but margin will wipe your account out immediately. Seriously, it will wipe it out. And that's what happens to a lot of hedge funds, because they go margin or leverage themselves up to like 20x. But on your average broker, you can margin 2x. Meaning, if you have $1, the broker will, lend you $1. They'll charge you interest on it, of course, but then leverage is leverage, right? So this chart goes back to 2020, only 4 years. This is the margin debt, like how much margin exists in the United States, meaning people have borrowed money and bought stocks with it, or bought indexes with it, whatever they bought. But this is on all borrowed money, right? Okay, so in 2020, the peak happened at right about $850 billion. Okay. And then Fed said, okay, no more zero interest policy. We're going to raise rates, and market went down 40%. And look what happened to margin debt, right? So margin debt collapsed. Basically, it went from 800 billion plus to 400 billion. The average is about 300 to 400 billion. Okay, that's normal. But now we're just hit 800 billion again. And we're on our way to that peak there that you guys can see, right? Is this completely alarming to me? Not so much, but then leverage in the system has to get unwound. And when prices start going lower, what do you think is going to happen to these people? They're going to have margin calls, and they're going to get sold out without them being able to do anything about it, right? Because the brokerage house is not going to let your account go into negative equity. They're going to sell you out, and that adds pressure. Is this completely alarming yet? No, but if it gets close to that other peak there, close to $1 trillion, then I think you guys need to watch that as well. So is the rug pull on the stock market imminent? I don't think it's imminent. I think until the elections, we're okay. But once the elections are done and we have a clear idea of who's in the White House and who has won the House and the Senate, then I think we're going to get a little bit of a swoosh here. So I'm ready for it, and I'm sure you guys will be ready if you're watching me. So the next topic is going to be, I'm going to call it, is it possible to turbocharge the Bitcoin Surrogate Microstrategy? I have been talking about this guy for months now, right? Michael Saylor, who is the CEO and founder of MicroStrategy, which I consider to be a genius, really. Not because I love Bitcoin so much. I have Bitcoin, but not to his degree. This guy is mortgaging his company and just buying Bitcoin, period. No ifs and buts about it. But now the powers to be have figured out, well, Bitcoin is not wild enough. I mean, Bitcoin moves like, okay, last time when Bitcoin went from 30,000 to 75,000, MicroStrategy went from 200 to 2,000. Is that enough action for you guys? It's mind-numbing, the moves that this stock takes. So the stock symbol is MSTR, Mary, Sam, Tom, Robert. And that's Michael Saylor with his laser eyes, right? Bitcoin eyes. Leverage, now the powers to be are bringing out leveraged ETFs on top of MicroStrategy, as if MicroStrategy is not wild enough or, moves wildly, right? Hundreds of points each direction. It just follows Bitcoin, because he just, borrowed another, like, I think 700 million, bought more Bitcoin. MicroStrategy is the largest holder of public company, largest holder of Bitcoin as a public company, right? I think they're up to 260,000 Bitcoin with an average cost of about 34,000. So if Bitcoin cracks and goes to 34,000, MicroStrategy, that is, I think 160 today, 165, will probably get halved easily. Or if Bitcoin goes to 110, 120, like I'm thinking it's going to do on the next leg up, MicroStrategy will easily double. So you can buy a MicroStrategy as a Bitcoin surrogate if you don't want to deal with Bitcoin. But now there are two, not one, but two leveraged ETFs on MicroStrategy. One symbol is MSTX, Mary, Sam, Tom, X-ray. The other one is Mary, Sam, Tom, under. So MSTX and MSTU, the powers to be decided. MicroStrategy, we need to turbocharge MicroStrategy. I'm thinking MicroStrategy is already so turbocharged. Why do we need this? Well, this is total pure gambling now. American investors appear to be regaining their appetite for risk. That's another sign of market top. As new exchange traded funds, ETFs, giving a leveraged position to MicroStrategy stock are booming. No kidding. MSTX, which launched in August, literally like a month ago, now has 357.6 million in assets under management. The fund aims to give investors daily leveraged investment results of 1.75 times or 175% of the daily percentage change in MicroStrategy stock. So if MicroStrategy moves 1 point, this thing, MSTX, is going to move 1.75 points. Okay. Now, they just brought one last month called MSTU, another ETF. This is even more leveraged. This is 2x, 200%. So if MicroStrategy goes up 1, this goes up 2. And it already received 80 million in assets. So what do you guys think? Did we need to turbocharge MSTR, MicroStrategy? There are many other ways you can do that. You can go on to buy the actual Bitcoin itself on an exchange and put it on your cold wallet. The other thing you can do is you can obviously do MicroStrategy as a Bitcoin surrogate, but you can also do IBIT, which is the BlackRock Bitcoin Trust ETF, which has gotten billions in dollars, right? So there's all these tools now. So if you really want to send it to the moon, yeah, go into MST or go into MSTX. When MicroStrategy is moving from 160 to 300, those underlying shares in those stocks will not only double, but it'll go 200%. So good luck. I'm looking at them. I really am. I mean, if they have options, I'm pretty sure. So, I mean, options, more leverage on top of leverage. Look, if you do catch a leg, I think they're worthwhile things to look at. But when they're going sideways, I don't think there is. Yes. So I'm going to answer all the questions. So, and then, I want to talk about Elon because I love Elon. I think he's a genius. I think he's misunderstood mostly. So the next topic is going to be, this just came out, actually. I think this came out October 3rd, yesterday. Okay. So Elon Musk says U.S. is on its way to bankruptcy. We agree, Elon. I think we already are bankrupt. I don't think we're on our way to bankruptcy. I think we are. So, and he was like, okay, here's the deal. What has a finite amount on our planet, right? Not fiat currencies. We can print all we want. So that's not finite. There's no end to it. It was finite when we were on the gold standard. But when the gold standard went away in the 70s, what happened? Start printing, start the machines. And then, surely enough, though, we got our money's worth. Our GDP exploded, right? Okay. But now, fiat currency is trash. It's like literal trash. It's like toilet paper. So, but what has a finite amount that I know of has not been disproven yet? What is that? Bitcoin. There's 21 million of these things out there. So when there's a finite amount of something, it's obviously we can't make more of it. Now, if tomorrow somebody came and said, oh, by the way, I can make another 20 million Bitcoin will go to zero. But so far, in 12 years of its existence, that hasn't been done. It hasn't been hacked. Okay. The ledger is still alive. If all the nodes die because there is a global power outage, when they come back up, everything will still be there. So I'm going like, this is pretty cool. So Elon has been tweeting quite a bit about the deficit, by the way. I think he's really concerned about it. And so somebody was saying in the chat that if Trump wins, he's going to make Elon the deficit czar. And he's going to come into Washington, D.C. with a toilet sink, like he did to Twitter, and fired 80% of his engineers. I think Twitter is still working, and I think it's working as good as ever. I mean, it's just a social media platform that did not need 6,000 extra people to function, which I believe the government doesn't need. Like the federal government is the largest employer in this country. Why do we need so many millions of people working for the government? Okay, I don't know. But he is going like Tesla, he's like 35 trillion. Elon, it's like since that article, we're about to hit 36. So give me a call. I think, we can work on this together. US bankruptcy warning predicted to trigger a Bitcoin price boom. Think about it, people. So when the deficit keeps going up, your dollars in your pocket is losing value on a daily basis. Okay. Well, there's only one, gold, obviously. That's why gold keeps hitting new highs, 26, 2,700 now, right? So that's an inflation hedge. What else is an inflation hedge? Real estate, right? I mean, you buy real estate, you rent it out, you control the rent, you can get a decent return out of it. Not today, obviously, because real estate prices are completely out of control. And so what else is there? Bitcoin. Okay. So am I saying just go put all your livelihood in Bitcoin? No. I mean, I have some Bitcoin, maybe like 5%, 6% of my net worth is in Bitcoin. I'm happy with that. I wouldn't definitely increase that allocation. So I'm going like, this is a pretty decent inflation hedge. And now that the Fed is cutting the rates and global central banks are cutting the rates, it may actually accelerate. That's why Bitcoin did so well. When the inflation, tornado hit the globe, or specifically the US, that's when Bitcoin went from, 25, 30,000 to 75,000. I think it's an inflation hedge because there's a finite amount of these things, 21 million, and 19 million has been already mined. And we know there are some missing Bitcoins. People have lost their cold wallets or, their codes for it. So I'm going like, I think this is a pretty good inflation hedge. Okay. Is it wild? Is it volatile? Of course it is. Should it replace the fiat currency? Of course not, because it's not big enough yet. But he's gone. America is headed for bankruptcy. With all due respect, Elon, I think we are already there. We've been there. We're just kind of digging it deeper now. The social media platform he bought and rebranded from Twitter, linking to a report of U.S. debt surging on October 1. And that was the last topic. In 3 days, it went up by $350 billion. 3 days. Federal debt explodes on the first day of new fiscal year, jumping $204 billion to a new record of $35.7 trillion. But it gets worse. Treasury also had to draw down its cash balance by $72 billion. That's over $275 billion in the Fed red in just 1 day. What is happening here? So if Elon or Trump, let's say, gets elected and keeps his word, because Elon is all in the Trump camp. I mean, if Kamala wins, I think they're just going to arrest him and shut down Twitter probably. So I'm going like, okay, if Trump wins and puts Elon in there, what is he going to do? How is he going to cut all this? How is he going to cut the spending? I have an idea. It's called ZBB. That's called zero-based budgeting. Look it up, people. Look it up. ZBB, zero-based budgeting. You know what zero-based budgeting is? A lot of companies actually around the globe use it. I run my household with ZBB. So ZBB is you look at your revenue, whatever's coming in, okay? And you allocate whatever's coming in, whatever's going out, you allocate with what's coming in. Balanced, always balanced. If what's coming in is going higher, budget goes higher. If what's coming in is going lower, budget goes lower. Budget gets cut. That's the only way to do it. So now he has to come in and throw the kitchen sink or the toilet sink into the government, cut spending. We got to cut spending. Where do we cut? Do we cut in Social Security? Do we cut in Medicare? Do we cut defense? Do we cut? First place I would cut would be, we don't need 10 million people running the government. So some heads have to roll. I mean, reality is reality. The last thing we should cut is probably Social Security, is because 70 million baby boomers are retiring in the next 10 years. That's my opinion. Defense, definitely. All the foreign aid, definitely. Just fix our own shit at home first before we do anything else. What else can we cut? You know how much fraud there is in our Medicare system and Medi-Cal, which is the state-issued healthcare systems? You know how much fraud is in there? Let's go in there and cut a little bit of that, right? And let's catch some people who are defrauding the government on a daily basis, okay? And that includes doctors, by the way. So There is a lot to cut, but if Elon gets the job, great. I'm all for it. But please go read about ZBB, zero-based budgeting, and run your household that way. So that means don't take the plastic out and buy shit you don't need constantly. So that concludes this part, and I'm gonna go answer some questions, and then we're gonna go to my account. All right, Mojotronics, good morning. He was there yesterday. Melvin, good morning. Chewy, hola. Craig, hola. Techie B, hola. Hello. It's great reinforcement using, yes. Yeah, macroeconomy. You got to look into it. Absolutely. So this was Techie B's suggestion. Since he's a member, was his suggestion. He's using LLM or large language model like ChatGPT or Gronk or whatever you want to use to question you, to quiz you, and get your answer. Jonathan, hello from Oregon. Hello, hello. Joy BTV, hello. Jason Williams, 1 time a month. Is that about your Starbucks expenditure? Only, really? You only go to Starbucks only once a month? I'm not buying that. How can you do that? You at least do it once a week. Okay. Jonathan says, I knew a missionary once in Iran who kept correcting me on the pronunciation. Strangely, I've known a couple of people from there and worked for an Iranian entrepreneur once. Sorry. Exactly, Jonathan. It's Iran, not Iran. We need Elon's weed whacker. You bet. I'm up for the job. Shout out to Apple Bottom Jeans. All right, this is my time to pump this up. Always love it when you yeah, I am trying, bro. But I haven't visited the Discord this week too much because I was like busy trading my butt off, and did really well, Apple Bottom Jeans. So highly recommend. It's a free Discord, by the way, people. If you're interested in, see, these people do something that I don't do, which is I still use my charts. I love my charts, and I have my level set up, and it's been working for me for 30 years. However, does not mean an old dog cannot, learn new tricks. That's me. I joined their Discord for like a week to 10 days. Okay, just listening in. What an amazing community. Okay, so it's called Quant Data. Go download Discord and go search for Quant Data and just go listen. Now, this may be, I know most of you are beginners here. This may be going way over your head, okay? But what they do is they don't look at charts. They don't look at economic conditions. They don't look at anything. All they do is follow the big money. They look at the flow of big money going into derivatives like options. And they've had quite a bit of success. So I'm going to keep listening. I'm going to keep learning. And but the community there is amazing. I mean, there are some super, super sharp traders over there. And Apple Bottom Jeans, shout out back to you. So it's called Quant Data, people. If you're interested, just go in there and listen. It's a free Discord, by the way. S Sunkite 1 says BTC is very long. Yeah, you just, DCA into BTC and have some of it for sure. Mojotronics said BITX. Yes, BITX is 2x on IBIT, if I'm correct. But the other ones are more fun on MicroStrategy because MicroStrategy is already turbocharged. Doe says, I really believe Bitcoin will be hacked. Okay, you're going against popular opinion, I guess. It hasn't been hacked for 12 years. Maybe these quantum computers and, they will figure it out. I don't know. You may be right. So if it does get hacked, I only hold 5-6% of my, resources in Bitcoin, so I'm not going to worry about it. So what I'm going to do now is I'm going to add my Thinkorswim account to the stage and get rid of this one. Hopefully you guys can see. So there was a comment during the members only live stream yesterday. They said, Hawk, you should make this screen larger. I'm going like, man, I will try. I don't know if I can, but I'm going to definitely try. So hang in there, guys. Okay. So what did I do? What am I doing? How's the market doing? All right. So I'm going to go through the usual watch list, Mag 7, my new and updated and improved watch list. So let's start with the S&P 500. So for many of you who've been listening to me, you guys know I'm kind of have a negative bias, right? So this morning when, actually, let's make the chart big. Okay. Let's see. Don't freeze on me now, you piece of, okay, here we go. So first of all, this is the S&P 500 going back 1 year, 1 day. So this is what's been doing. Okay, each bar is 1 day. Low of 410. We're at 570. I mean, beautiful uptrend. What is there to question here? Okay, nothing. And so most of you know that I had a negative bias. I traded beautifully in and out of puts this week, a lot. But then before I do any of that, let me go into my account. Okay, this is my account. This is my positions. What did I do today? What did I do this week? Well, this week, so I'll just give the positions up front, and then you guys will figure it out. So I have my 325 now. A lot of ticket calls on Hain Celestials. I have 10 days to go, 10 trading days. Stock is 876. I have the October 18th expiration, $10 calls. It's a lot of ticket. I paid a nickel for them. Can't pay much less than that. Willing to have them go to zero, but no big deal. As you know, I started buying Lunar, LUNR. I've accumulated enough now. I have 50 of the November 15th expiration, $9 calls, and 40 of the November 15th expiration, $10 calls that I've collected or bought. On the 9s, my cost is 94 cents. On the 10s, my cost is 62 cents. At the moment, I'm even or up a few dollars on the 10s and down about $570 on the 9s. However, you guys have to understand, this week I was long NVIDIA. If you watch Monday and Wednesday, you guys saw my positions. I was, long a lot of different things, which worked out perfectly fine. I was long Sleep Number, which I traded in and out. I mean, everything on my watch list, basically, I was there and I did it. So on the S&P 500, I was on a calendar spread, which I'm going to let the short side expire worthless. I'm short today's expiration 555 puts, which I took in over $1 for. And I'm long now. I added 3 more today. I'm long. I was long all the way up to maybe 23 puts. Every time the market sold off, I took profits on those. So overall, my account was about 5.5% this week. I started adding something new today. So when I will show you guys the chart, when things go parabolic meaning like straight up to the skies, it's going to end. So I bought 15 of the puts, and I'm on a stock called Capricorn Therapeutics. Stock was 5. It hit 22 today. And when things go parabolic like that, I always take the other side. Again, this is not financial advice or trading advice. If you do this and follow me, do it at your own risk. I am not going to say anything else. Oh, and I'm also long 35 November 15th expiration, 115 calls on Micron, and I'm just about even on that position. I'm long 35 of them at 225. They got as high as 285. That's about 30% profit. I didn't take it. This is a directional bet, but we'll see. If the market's going to melt up, obviously Micron's going to do well. So today's new position that I started opening is buying puts on Capricorn Therapeutics. The symbol is CAPR, Charlie, Apple, Paul, Robert. It's a counter trend thing. I do these once in a while. I bought 15 so far. I have more open orders. And where did my orders go? I had orders. Oh, there we go. There's my orders. I have 5 more to buy at a 105, 10 at 10 more to buy. These are the November 15th, $15 put. Stock is 20 and a half. Implied volatility is extremely high on these. Octobers were higher. That's why I bought the Novembers. And this is not going to be holding forever trade. I'm looking for a whoosh back down to 15 or maybe lower, and these will double. In fact, today's high on these was 2, so I'm paying about $1.05, $1.10 for it. So I was only able to buy 15, but I'm in line to buy 25 more of these puts. My cost is 108. So when the stock was like 22 and a half or so, I bought it. So it's pulling back a little bit, but no big deal. That's where things stand in my account. I would say I'm about 88% cash. Traded beautifully yesterday and the day before. So I'm going to go to the front screen and go through my watch list and answer questions. Please, come with all your questions. Let's go. So this is the S&P 500 daily. Higher highs, higher lows. It's kind of struggling here. Looks like a little bit of a rollover, but when that happens, I'm ready for it because I have the puts I'm holding, by the way, that I traded in and out a million times this week are the October 18th expiration 565 puts on the spiders. This is that. This is the triple Q. I'll go through the list real quick and then answer questions, and then we'll be done. So this is the triple Q. Same look. Beautiful uptrend. Nothing not to like about it. Let's go through the Mag 7. Apple. Apple is just going kind of sideways, biding his time. Pretty close to an all-time high. Although Warren Buffett is not liking Apple. He's selling it. But this pattern, if you guys read your technical patterns, this is like a little, it's gathering itself into this massive wedge here. It's a bullish pattern, but if it breaks down, we know what to do. It's above its 50 EMA, so inconclusive, really. The two stocks that are the best looking Mag 7 stocks are Meta, new high today. I mean, when the market sold off, it didn't sell off. And of course, this is called outperformance versus underperformance. Because if you can compare Meta to a Google's chart, you guys can see the difference, right? Look at Google, nowhere near all-time highs. It's kind of just struggling at like 170. And look at Meta, how different it is. So even within the Mag 7, you guys need to understand that there are companies that outperform or underperform. This is NVIDIA. So you need to find the ones, if you're going to trade the Mag 7, the ones that are outperforming. NVIDIA, biding its time, going sideways. This looks pretty much like Apple's right here. Pretty much the same chart. A lot of these stocks are looking alike. This is Microsoft. Kind of, just like Google, really nothing there. Amazon is probably doing better than Microsoft and Google. And then the other net one, Mag 7 stocks that's doing really well is Netflix. Yep, an all-time high right there. So nothing not to like about it, man. But again, underperforming and outperforming, right? So let's go through quickly my watch list. This is the one I missed this morning, and I'm kicking myself, right? But I had a good week. I was like, why am I getting involved on a Friday? Affirm, right? We've been talking about this. We traded it. Hopefully you guys did. I traded it from like 37 to 45 and then went to 48 and pulled back. And on Wednesday, literally on Wednesday, I said, if it pulls back to the 50 EMA, you guys should look at it. Well, it literally kissed the 50 EMA this morning at 37.15. And like a dummy, I said, yeah, I think it's going to break 37, then I'll buy it. And I didn't look at it. And I look at it, it's turned green already. But not too late. I still like Affirm. It gives me a little bit of a pullback to 38-ish, low 38s. I'll start scaling in. I don't have a position in it at the moment. So I added a few things to my list, always rotating, right? This is called Albemarle. ALB is the symbol. This is a lithium stock. Now it's under the 200, above the 50 and 20. Nothing major yet. But if you guys look at album, one of the reasons I looked at a group of lithium stocks, is because of Elon. Elon said, if you're an investor, you should invest in lithium. I'm going like, he must know something. So I went and picked myself 3 lithium stocks. This is one. It's gapped up today. It's at 100. It was as low as, this is Albemarle going back 3 years. So it's clearly in a downtrend. Not my cup of tea, but this thing was as high as 340. Okay. And then it just died. Now it's just kind of going sideways. I like these patterns, but then it went sideways before at like 140, broke down and got halved again. So clearly in a downtrend on my watch list. Not a really gambling mood in this one. I need a clearer picture, but it's on my watch list. AMD. Looks nice to me. I mean, pullback, reaction high coming up, probably test 185, 190. Nothing wrong with that one if you own it. Amazon, we looked at. Another one I missed this morning, ASD Space Mobile. I'm going like, why am I missing these? Because, when you have a good week, you don't want to give up anything, right? And ASD Space Mobile, I still think it's going to go a little bit more sideways, and the next leg is going to come. MACD is kind of subsiding, going down now. The symbol is Apple Sam, Tom Sam, definitely on my watch list. Anywhere around 22-ish, 23, definitely start accumulating. Risk is pretty low, really. I mean, risking about 21 and a half. It was as high as close to 40, so I like it. But that's what you have to do, right? You guys have to have a watch list, and when they get to where they get to, you execute. Avago, Nancy Pelosi stock. Look at that, almost at an all-time high. You guys know about Alibaba, right? I mean, I'm still long, but I'm okay. If you guys followed me on this one and bought the stock in the mid-70s, I have a long-term portfolio, and Baba is in there. I trim probably 50%, right? I'm going to hold the rest. On a pullback, I'm definitely going to add back to it, but I'm just kind of, it's gone parabolic. I mean, the thing is like 115, okay? And that's because the melt-up happened in China. Chinese PBOC cut the rates by 50 basis points. There were a lot of hedge funds, quant hedge funds actually, that got caught short in these Chinese names, and they're all getting wiped out. And I'm like, okay, cool. So I added a whole bunch of Chinese names into my list, right? That's called rotation. You guys got to change what you guys look at. And Baidu is one that I added. Everything like this stock, let's say, okay? So it goes from 80 to 115 in a matter of a week and a half. Now it's above all its moving averages. It's been under its 200-day average forever. So if you look at a 3-year chart on Baidu, look how much this thing got punished when it was in a downtrend, right? Just trade with the trend, people. Don't go against the trend. Look at that downtrend. 160 down to 80, down 50%. Why do you guys want to be here when it's doing this here under its 200 and all that stuff, right? But now we have turn. High volume has come in. Conviction is there. This is turned from sell on rallies to buy on dips. Baidu, right? So where is the buy point? Well, look at your chart. I mean, it's just it doesn't mean it's going to happen, but my first buy point would be probably right about 100, maybe a touch above, right above the 200-day average. Okay. If it pulls back 10%, definite buyer of Baidu. And these are all buy on dips now. Billy. Oh, that was one of my shorts actually. And then I did the same thing I'm trying to do at Carp, right? Look at that parabolic move. You guys go watch Fair Hours from 3 months ago. Baba and Billy were the two stocks. Billy was about 14, 15. And literally went from 16 to 32, doubled in a week and a half, or less than 2 weeks. And, now these are getting wild. When things go parabolic, I really don't like it. I like a more sustained 45-degree move. So CAPR is the one that I'm buying puts on. Capricorn Therapeutics. That's why I'm buying puts on these things. Okay, on this one specifically. Stock was 5. Announcement came in. They're gonna have a product that could solve whatever. I really don't care actually the fundamentals. I'm just looking at the chart. Parabolic. When things go parabolic, they don't end well. So I'm buying the $15 puts right here. This is the position right here, and I have 15 puts so far, with a cost of $1.08, and they're $1.22. Nothing major, but I am definitely trying to buy more, without a question. Okay, so that's one. The old favorites that I've been talking about for months, Kava. Okay. Really cautious on Kava. Actually, I lightened up like I lightened up on my long-term portfolio on Kava as well. I bought the stock when I first ate there about 8 months ago, like in the mid 30s. And then, investing is really not that difficult. It was right here when I first ate it. And when was it? October or so last year, October, November. And then a triple, right? So it's 125. I'm really being cautious with this. I have trimmed on Kava, but to each their own. Carvana, new high, right? Yeah, you just keep talking about the same ones because they keep making new highs. Look at it. It pulls back. See, the buy on dips strategy on these works. You just got to find few charts and just trade the same damn things. You guys don't need to, create the wheel. FSLR, I liked for at least a couple of weeks. Now it's kind of rolling over. I'm just watching it. I'm not as keen on it as I was on the breakout. Went from like 235 to 260, but not enough. Down 7 points on an update today, so gotta be careful. Goldman Sachs, I added it last week actually. It looks like actually like the Russell 2000, pretty decent chart, just kind of biding its time before it breaks out. And that's why if all these stocks that look alike like this with these wedges that they're building, if they'll break out, we have something here. My lotto ticket is called Hain Celestial. I mean, I like that pattern, that little pattern, but do I have enough time? I have 10 trading days after today. If that thing breaks like 9:30, my lotto ticket of a nickel could turn into major dollars, but I'm willing to let them go to the wall, though. Not a huge hit. This is Russell 2000, same pattern as Goldman Sachs, same pattern, a lot of stocks. They're just going sideways before a breakout, and you guys got to be watching it. Another Chinese stock I added is JD.com. These are, look at this, right? So don't chase it. Don't get into FOMO. No need to get into FOMO, right? But now you have clear guidelines. Will it pull back? Of course it will pull back. Okay. But now things have changed in China. The macro is trying to, by lower interest rates, they're trying to stop deflation, which they think is coming, and then pump up their economy. And this global effort of soft landing is going to be hopefully managed by these people. JP Morgan, not my favorite, but it's okay. I like Goldman Sachs better. This is the regional banking index. Now, lower interest rates are good for regional banks more than the big banks. This, I like this the way it's just going, kind of sideways, but lower interest rates are going to help. The symbol is KRE. That's the regional bank ETF. One second. Okay. Back at the ranch. Oh, another one I missed, Cameco, which is nuclear. They have nuclear power stations. Actually, one of our viewers here, Vic, I don't think he's here today, but he mentioned on a stock that I'm going to put up the chart. And I think Apple Bottom Jeans, I think I printed that on your Discord. NNE was the symbol. But then let me just go alphabetically through my list. Lumen is another one, but Lunar, L-U-N-R. I like this chart quite a bit. Those are the ones I have 50 calls, November 15 expiration, $9 calls, and November 15 expiration, $10 calls. It came right at its 20-day EMA, low volume, cracked on high volume. They have catalyst. They got an asset contract of 4.2 billion. I think this is just the first leg. I think many more legs to come. So I'm long on LUNR. Oh, Mojotronics is here. Let's take a look at CLSK. Is it doing anything? Hey, what? Up 10%? Huh. Okay. You may have a shot here. Now let's look at the other ones. Mara. These are the two best Bitcoin miners. Still going sideways, but I should rotate these back into my screen. I mean, that thing takes out 1775. We can get up to 25. Okay, I'm adding these back. CLSK and Mara are going back into the watch list. What else? Let's see. Microsoft we looked at. There you go. The turbocharged MSTR. Let's look at them. This is MicroStrategy, people. This is exactly looking like the Bitcoin chart. I mean, this is a massive, massive pattern. It's been going sideways like with Bitcoin. So as I said, when Bitcoin went from 25K to 75K, this thing went from, this is the split price. It went from 50 to 220. And then from 200 down to 100, okay? From 100 back to 180, back to 120. You guys have the stomach. I mean, this is a trader. Back to 180, back to 100, literally when the, flash crash happened. And now we're back to 180. So right into resistance. I'm telling you, if Bitcoin breaks out here and goes to like 110, this is going to easily double. But let's look at the ones that I was talking about. MSTU, that's the double ETF. Okay, let's look at this. So MicroStrategy today is up 6%, okay, up 10 points at 174. Bitcoin must definitely be up a lot today, or maybe like 62, 63,000. MSTU was the 2x levered one. So if Bitcoin is up, not Bitcoin, is MicroStrategy is up 6.5%, MSTU should be up what? 13%. Let's take a look. Sure enough, look at that. Up 4.85 points, exactly up 13%. There you go. And MSTX was the 1.751. And so if Bitcoin is up 6.5%, MSTX should be up about 11%. Let's take a look. Sure enough, to the nose, 11.12%. There you go. I know my math. Yes, this is the VIX stock. I call them NNE. NNE is nanonuclear energy. I put this on the Discord, Apple Bottom Jeans, and when D4D asked, what nuclear stock, because he loves CCJ, I said NNE. Nobody paid attention to it. It was like about 11, I think. Apple Bottom Jeans were at 19. So another one I added to my lithium stock list, which I'm not in, and I'm kicking myself. And this morning, again, this was the third one I missed, called Piedmont Lithium. Again, it's under his 200. It's against my religion to buy anything that's under his 200-day EMA. Look at this downtrend, right? But now with volume, we're kind of curling up. It's up 18.5% today at 1175. Definitely be watching this like a hawk, but I stick to my rules. I'm not going to break my rules. Okay, it's in a downtrend. Look at this downtrend. Okay, this thing was a $70 number, came down to 6 people. Okay, I can't break my rules. Now, will I have to wait until it goes above its 200, which is like 15 and a half to buy it? No. Now it's above its 50, it's above its 20. MACD is turning up finally, going above 0. Okay, there may be a short-term trading opportunity in this. Maybe, on 11:10, it was this morning. I looked at the November $10 calls, did not buy them. I was doing a couple other things, and of course, 1175. Probably will miss this, but I don't think it's too late. I think we'll get 15 out of this. A test of the 200-day is definitely a possibility. PLL, Paul, Larry is the symbol. Palantir, new highs. See, you guys got to stick with stocks like this. You know, there you go. It's new all-time high. See, just went sideways. In fact, somebody asked me about Palantir on Wednesday. I was like, yeah, it's going to go higher. Okay, cool. Rocket Labs, I added on Monday. RKLB is the symbol. $10, new high. I mean, I don't know. Just find uptrending stocks. Ooh, little bug-eye robots taking off. Serve Robotics. What? Up 13%. Okay. Yeah, this is the one that I told you guys to buy at $2. Went to 24. I sold it at 8. Watch it like a schmuck. Okay. Sleep Number. I mean, right there. We've been talking about this as well in the 12s, 13s. I think somebody in the chat, actually, one of the members yesterday said, yeah, I bought it. I'm like, great. There is another one, parabolic one, that's going up with the financial craze in China. Look at this thing. $3 2 weeks ago. 11.5, almost hit 12. Parabolic up. Be careful with these. Another one of my favorites, Upstart, down to exactly, I traded Upstart with you all, so that was also last week. Buy on pullbacks, find stocks like this. Another one I added is Unity Software. Just about ready to get breaking out. And Zillow was another one. Pulling back. It's like right where it needs to be bought, right about 63-ish. So lower interest rates should help this company. So I'm going to go to the front screen, answer some questions, and I got to get off in 9 minutes. So thank you for the patience, but that's the watch list. We will put out the watch list one by one. You guys can slowly watch it and make sense of it. All right, let's see if we have any questions. Oh man, StreamYard. Okay. Okay. All right. Let's see where we are. Okie doke. All right. So okay, hold on a second. Let me get back to these questions because I got to get off in 8 minutes. Okay, SPY is in a controlled uptrend with occasional hiccups. Absolutely. Fantastic comment. I couldn't have said it better myself. I appreciate the comment. There's no invite link. You just got to go. Anonymous Giraffe. Just go to, if you're Discord, if you have Discord app on your phone, just go in there and search for quant data. You don't need an invite. Just click on it. You'll be hearing it. They come on at 6:30 in the morning when the market opens, West Coast time, because they're in Vancouver. And they go off at 1 o'clock. So you don't need an invite. We Zoom. Yes, we Zoom. We're trying. Look at NNE. I did look at NNE. Didn't I? Yeah, $19. BlackRock just put 90 million into some lithium deal. Yeah, exactly. Well, that was PLL. That was Piedmont Lithium and Albemarle. That's why I put those. See, we're ahead. We're thinking alike with BlackRock. It's kind of going with the flow. We're always ahead. We Zoom. Always thinking. New comments. All right, so Motortronics member, thank you for being a newbie doing a buy and hold strategy with small 2K account. It's best to buy uptrends. It's best to buy dips in uptrends is the correct statement. It's not best to buy uptrends. If you catch something on a breakout, buy it and add to it. Buy high, sell higher is the deal. However, if something has established uptrend like Carvana or Kava, these long-term 6, 8, 9 month uptrends, right? Every pullback should be bought. If you're trading in and out, swing trading, okay? If you're position trading, you just buy it and hold it in a different account, long-term investing account. Go along, sell with any profit, rinse and repeat on the dip. Options are down the road, trying to keep it simple. Excellent. See, he was in the members meeting yesterday. I think he learned. I wouldn't trade China stock. US stock is hard enough. Yes and no. Don't be biased. Geez, look at the lifetime chart for CAPR. What am I supposed to look at? It's just gone parabolic. Okay. Okay, well, let's take a look. And somebody's asking about Rere. Okay, I'm going to end this here. My strategy is boring. No, it's not boring. It's the right thing to do. You got to, like I said yesterday, first learn how to trade the underlying. Then you can add leverage by options. You can't do option. I said it yesterday. I'm going to say it now because it was members only yesterday. Today, open for all of you. Options are the tail that wags the dog. Is it? So options are the tail. It's a derivative of the body of the underlying, which is an index or a stock, right? You want to treat the body first. You want to understand what the body is doing first before you understand what the tail is doing, okay? And to understand the tail is a lot harder because there's many variations of the tail. They wag sideways, they're happy, they get it straight up, they're about to bite you. I mean, it's a perfect analogy, okay? Learn how to deal with the body first, and then we can figure out the tail. Most people, though, they go into the tail first, and then they get blown out because they haven't figured out what the body is doing. Yes, you know about pullbacks. Of course you do. Okay, we're going to check RERE, and we're going to check CAPR long-term, and we're going to be done. Let's do it. CAP, RERE first. Resume. RERE. What is RERE? ATR new, Inc. ADR. Okay, let's take a look. Nice. Okay. What they do? Well, who cares what they do? A little bit, I'm just nervous about just made an all-time high, broke out above the range, and then it's kind of failed. Those kind of fake breakouts make me nervous. But let's look at the long-term chart. Nice. Yes. Let's add it. RERE is added to my watch list. Atranu Inc. ADR. Foreign stock, 292. We definitely are adding this to our list. It's been going kind of sideways and still going sideways. In fact, while I'm talking to you guys, I'm going to add it to my watch list. RERE. Low risk, really? Oh, this is China. Okay, fine. I don't know. Weasel's not going to like it. RERE. Okay. Decent. Low risk trade, really. I mean, even if you get in at 290, 270, 280, whatever, you know, these lows are gone. You're out. If it breaks 2, you're out. So you're risking quite a bit, though. If you're at 280, you're risking like 30%. So you try to buy it lower, whoever was asked the questions. And last one, CARP. Long-term chart. What about it? Was it CARP? No. Never mind. Hold on a second. I'm long the puts. I don't even know. Caper. Never mind. Okay, let's look at the long-term chart. What about the long-term chart? It's probably, I don't know. Did it have reverse splits? Let's take a look. No. Okay. It has never been this high before. Is that what you're trying to say? Or is it gone to the moon? Or I don't know. You mean going back to like 2015? Yeah, I had reverse splits though, buddy. You just got to see these. I guarantee you, there is a reverse split in here somewhere. This thing was as low as 88 cents. Then once more sideways, just turned up, broke out. Yeah, could it go parabolic? That's why I'm buying options. Could it go to 40? Of course it could. Could it go to 60? Of course it could. I don't know. But that's why you buy the puts on options. You don't short the stock. Otherwise, you will get your butt handed to you. There are things that I do short the equity itself, but not this one. This one just takes a couple thousand of my money and put it in long November 15th $15 puts. If it goes higher, I'll buy it. There definitely will be a dump on this, or they will issue shares. I will look at, go to Yahoo Finance, resume, and look at their statistics, see if they have an S1, meaning they could issue shares. And what they'll do is when stocks go like this from 4 to 22 in a week, the companies use that occasion to issue shares. And if they have an S1 filing, then you'll know they're about to issue shares, and the stock will sell off sharply. It'll be like so if the stock is 21.17 now, and it could go to 25 before it goes anywhere else. So I will add to my put, the November 15 put, and so 4.5 to 22, 50% correction is just about 15, but at 15, these puts will be at least double and a half that I'm buying now. So I have more buy orders in the puts, and that's it. So I'll get back to the front screen and end this for today. All right. And a couple more comments, and then we'll go. So you have a great weekend. Be safe out there. Stay healthy. Stock trading should be boring. There you go. Stock trading should be boring. Anything that trades above 200 moving average on weekly, that's way too long for me. I'm more like a daily, okay? But if you're a super long-term investor or, position trader, then yeah, for sure. I agree. Lifetime, that doesn't matter. I'm in November puts, buddy. Lifetime is not going to make any difference. I'm in it for the quick buck. Rare, okay, it's good. Not as good as TIGR, but yeah. All right, so no more comments. Thank you, everyone. So next members only live coming up October 17th on a Thursday. Support the channel, grab a membership. Before you go today, please thumbs up on the live stream. Go check out the other content. There is really good content. And thanks, everyone, for watching, because I have a call at noon that I have to be ready for. But much appreciated. Thank you for the support. Channel is growing. Please share. Please talk about it. These are the topics you guys should be talking about. Not trading, but the macro topics should be the ones talking about. Water cooler with your family at dinners. Teach your kids these things, because unfortunately they're not being taught at school, and they get out of college with $100,000 debt, which is horrible. And then they struggle. So teach them these things, talk about these things, open conversations, open their eyes, get them used to that $100 investing. Let them do it with $10. If they're 15 years old, by the time they're 55, that $10 a month is going to turn into massive amounts of money. So believe in the system, unless you think the world's coming to an end. No, I don't think that's going to happen. So don't be a pessimist, be glass half full. Have a great weekend. Be safe out there. I will see you guys on Tuesday on the other channel, or Monday here, actually. Monday here, 10 a.m. Pacific, 1 p.m. Eastern, on Trading with Sergio. So have a good one.